From ancient civilizations to modern economies, gold has captivated humanity for millennia. For centuries, it's been more than a beautiful metal. It's been a symbol of wealth, power, and financial security. Empires rose and fell on its value, and even today, it holds a unique position in the global financial system. But the question is, in our fast-paced digital world, does gold still hold the same allure? The answer, my friends, is not as simple as a yes or no. While gold may not be the primary investment vehicle it once was, it still plays a crucial role in a well-balanced and diversified portfolio. Why? Because gold has this incredible ability to hold its value, especially during times of economic uncertainty. So whether you're a seasoned investor or just starting to dip your toes into the market, understanding gold, its benefits, and its risks is absolutely essential. In this video, we're going to delve deep into the world of gold, exploring its potential to shield your hard-earned money and help you weather those inevitable financial storms. Let's be honest, everyone worries about market downturns. The stock market can be a fickle friend, soaring to new heights one day and plummeting the next. It's enough to make anyone's stomach churn. But that's where gold steps in, shining brightest when the financial world feels dark and uncertain. You see, gold is like the strong, silent type in a crisis. It doesn't panic when the stock market throws a tantrum. In fact, it often does the opposite. When stocks and bonds start their downward spiral, investors often turn to gold as a safe haven, a way to preserve their capital. This surge in demand pushes the price of gold up, acting as a buffer against those market losses. Think of it as an insurance policy for your portfolio. You wouldn't drive without car insurance, right? Well, gold can act as a form of financial insurance, helping to protect your investments when you need it most. Now, I'm not saying gold is going to make you rich overnight. It's not about getting rich quick. It's about safeguarding your wealth over the long haul. It's about sleeping soundly at night, knowing that a portion of your assets is secure, no matter what chaos might be brewing in the markets. So, if you're looking for a way to fortify your financial fortress against the unpredictable nature of the markets, gold deserves a place in your investment strategy. It's a time-tested way to protect your hard-earned money and weather those financial storms with greater confidence. Remember that loaf of bread your grandparents used to talk about, the one that cost a nickel? That, my friends, is the insidious power of inflation. It slowly chips away at the value of your money, making it harder and harder to afford the things you need. But here's the good news. Gold has proven to be a formidable inflation fighter. For centuries, gold has maintained its purchasing power, even as the prices of goods and services have steadily risen. Why is that? Well, unlike paper currency, which can be printed endlessly by governments, the supply of gold is limited. This scarcity is what gives gold its intrinsic value, a value that has endured throughout history. So, when inflation rears its ugly head, diminishing the value of your cash, gold stands firm. In fact, its price tends to rise during inflationary periods, acting as a hedge against the erosion of your purchasing power. It's like having a secret weapon against inflation, a way to protect your savings from being eaten away by rising prices. By including gold in your portfolio, you're essentially building a wall against inflation, safeguarding your financial future. You've heard the saying, don't put all your eggs in one basket. Well, in the world of investing, this is more than just a catchy phrase. It's a fundamental principle. You see, diversification is the key to mitigating risk and building a resilient portfolio. Think of your investment portfolio like a well-balanced meal. You wouldn't want to eat only one type of food, right? You need a variety of nutrients to stay healthy. The same goes for your investments. That's where gold comes in, adding a unique flavor to your financial plate. Gold's low correlation to other assets like stocks and bonds makes it the perfect diversifier. When stocks zig, gold often zags, creating a balancing act within your portfolio. This means that if one asset class takes a hit, the others can help cushion the blow. This diversification helps to smooth out the bumps in the road, reducing the overall volatility of your portfolio. So if you're looking to build a portfolio that can withstand market fluctuations and stand the test of time, remember the importance of diversification. And in that quest for balance, gold can be your golden ticket to a more resilient financial future. Now let's address the elephant in the room when it comes to gold. Unlike stocks that pay dividends or bonds that generate interest, gold doesn't produce any income. It's not going to put money in your pocket every quarter, and for some investors, that's a deal breaker. And you know what? That's okay. Every investment has its pros and cons, and it's essential to understand them before diving in. Gold is not about generating a steady stream of income. It's about capital preservation and hedging against risk. Think of it like this. You wouldn't buy a fire extinguisher expecting it to cook your dinner, right? Its purpose is to protect you from a fire, not to prepare a meal. Similarly, gold's role in your portfolio is to safeguard your wealth, not to generate a paycheck. So, if you're looking for an investment that will provide a regular income stream, gold might not be the best fit. But if your goal is to protect your assets from market turmoil and inflation, gold can be an invaluable tool in your financial arsenal. Owning gold isn't like owning stocks or bonds, where you can simply hold your assets digitally. Physical gold, like bars or coins, comes with its own set of costs. You have to store it securely, which often means renting a safe deposit box or using a specialized storage facility. These storage fees can eat into your returns over time, so it's crucial to factor them into your investment equation. Don't let those seemingly small fees catch you off guard. And then there's insurance. You wouldn't want to leave a significant amount of gold uninsured, would you? Of course not. But insurance comes with its own set of premiums, adding another layer of cost to your gold investment. Now, I know what you might be thinking. Suze, this is starting to sound expensive. And yes, owning physical gold does come with its share of expenses. But remember, you're paying for security and peace of mind, knowing that your investment is safe and sound. Now let's talk about everyone's favorite topic, taxes. Unfortunately, Uncle Sam always wants his cut, and gold is no exception. In fact, the tax implications of gold can be a little tricky, so listen closely. You see, the IRS classifies physical gold, like bars and coins, as collectibles. And here's the kicker. Collectibles are taxed at a higher rate than capital gains from stocks or bonds. This means that if you sell your gold for a profit, you'll likely be paying a heftier chunk of that profit to the taxman. Now, I'm not saying this to scare you away from gold. It's just essential to be aware of these tax implications so you can plan accordingly. Talk to a qualified tax advisor to understand how these rules apply to your specific situation. So, you're ready to add a touch of gold to your portfolio. But where do you even begin? Well, the good news is you have options. There are various ways to invest in gold, each with its own set of advantages and drawbacks. Let's start with the most traditional route, physical gold. This includes purchasing gold bars or coins from reputable dealers. It's tangible, it's yours to hold. But as we discussed earlier, it comes with those pesky storage and insurance costs. Then there's gold jewelry. While it can be a beautiful way to own gold, it's not always the most practical investment. The craftsmanship and design of jewelry often inflate its price beyond the actual value of the gold content. If you're looking for a more liquid and cost-effective way to invest in gold, consider gold stocks. These are shares of companies involved in gold mining and production. Their value is tied to the price of gold, but be aware that they can be volatile, just like any other stock. And finally, we have gold funds, such as exchange-traded funds, ETFs, and mutual funds. These funds invest in a diversified basket of gold assets, offering convenience and liquidity. They're a great option for investors who want exposure to gold without the hassle of owning physical bullion. So, there you have it. Multiple avenues to explore, each with its own set of considerations. The best choice for you will depend on your individual financial goals, risk tolerance, and investment timeline. Now, the million-dollar question, is gold a good investment? The answer, my dear investors, is not a simple yes or no. It depends. Gold is not a get-rich-quick scheme. It's not going to make your portfolio skyrocket overnight. Instead, it's a strategic asset, best suited for specific financial goals and market conditions. If you're looking for an investment to generate a steady income stream, gold is not your answer. But if you're seeking a safe haven for your wealth during economic uncertainty, a hedge against inflation, or a way to diversify your portfolio, then gold deserves a place at your financial table. Remember, gold shines brightest during times of economic and geopolitical turmoil. When fear grips the markets, gold often thrives. It's the asset that investors flock to when they're seeking safety and stability. So before you jump on the gold bandwagon, ask yourself, what are my investment objectives? What is my risk tolerance? And how does gold fit into my overall financial plan? Answering these questions honestly will guide you toward making the best investment decision for your unique circumstances. You're convinced about gold's potential and ready to incorporate it into your portfolio. But how much is too much? What's the right balance between gold and your other investments? Well, think of gold as a spice in your investment recipe. Just like you wouldn't dump an entire jar of salt into your soup, you don't want to overload your portfolio with gold. A little goes a long way. Most financial experts recommend allocating between 5% to 10% of your portfolio to gold. This allocation provides a layer of protection without sacrificing potential growth from other asset classes. Of course, the ideal percentage for you will depend on your individual circumstances. Factors like your age, risk tolerance, investment timeline, and financial goals all come into play. If you're closer to retirement, you might consider a slightly higher allocation to gold, as it can help protect your nest egg from market volatility. On the other hand, if you're younger and have a longer time horizon, a smaller allocation might be more appropriate. Remember, your portfolio allocation should be tailored to your unique needs and goals. There's no one-size-fits-all approach. Now that you're armed with the knowledge to make informed decisions about gold, let's talk about some golden rules for investing wisely. First and foremost, do your homework. Don't just blindly follow the latest investment fad or listen to that friend of a friend who claims to be a gold guru. Research reputable dealers, compare prices, and understand the different forms of gold investments available. Speaking of reputable dealers, always, and I mean always, buy your gold from trusted sources. Look for dealers accredited by reputable organizations like the American Numismatic Association or the Professional Numismatists Guild. This will help ensure that you're getting authentic gold at a fair price. Now, if you're not comfortable with the idea of storing physical gold, consider gold stocks or funds. These offer greater liquidity and ease of management, making them a suitable option for many investors. And finally, remember that gold is a long-term investment. It's not about timing the market or trying to make a quick buck. It's about holding a stable asset that can help preserve your wealth over time. We've covered a lot of ground today, from gold's historical significance to its role in a modern portfolio. Remember, gold is not a magical elixir for all your financial woes, but it can be a valuable tool when used strategically. It can provide a safety net during market downturns, a hedge against inflation, and an avenue for diversification. But it's essential to be aware of the costs, the tax implications, and the fact that it doesn't generate income like some other investments. The decision of whether or not to invest in gold is deeply personal. It should align with your financial goals, risk tolerance, and overall investment strategy. Don't let emotions or market hype dictate your decisions.